Welcome back, viewers. You're watching the Savera and I'm Shafali. The Pakistan Stock Exchange website was temporarily taken off on today, following a dramatic drop in the benchmark KSC 100 index. The sharp decline of over 2,500 points were triggered by escalating geopolitical tensions between India and Pakistan, specifically following a terrorist attack on tourists in Pahalgam, a popular hill station in Jammu and Kashmir. The website displayed a brief message stating "will soon be back," indicating maintenance, which coincided with the turmoil unfolding in the stock market. The KSC 100 index, which represents the performance of Pakistan's top listed companies, saw an immediate and steep drop of 2.12% or 2,485.85 points shortly after the market opened on April 25th, that's today. This brought the index down to 114,740.29 points, which is 1,14,740.29 points. It has a sharp fall marked continuous to the previous day's losses, where the PSX has already closed in the red following negative economic data and the following security concerns in the region. Investors' sentiment were already fragile due to the range of negative economic factors, including a downgrade in Pakistan's economic growth forecast. On April 24th, the International Monetary Fund revised Pakistan's GDP growth forecast towards to a mere 2.6% to the fiscal year 2025. The IMF's warning followed a series of issues affecting Pakistan's financial stability, including a rising fiscal deficit and inflationary pressures. Now, these factors compounded the broader economic uncertainty that already plagues the country, contributing the investor cautious. The depreciation of Pakistan's currency and growing concerns over political instability have compounded the market's vulnerability. Currency instability, coupled with the concerns over Pakistan's foreign exchange reserves, has left investors anxious about the future economic trajectory. In addition, security risk in the region, particularly in Kashmir, have spooked international investors, who fear that these risks could translate into broader economic and political instability. Adding fuel to the fire, Fitch Rating, a major global credit rating agency, raised concerns about Pakistan's long-term economic stability. In a statement, Fitch highlighted the deteriorating fiscal position and the country's vulnerability to geopolitical risk, which were further amplified by the recent developments in Kashmir. These concerns were echoed by market analysts who warned that the combination of political and security risk would deter foreign investments, further destabilizing Pakistan's economy. Now, India's response to the terror attack in Pahalgam, which occurred on April 22-25, also added to the heightened tensions. The Indian government, through its Ministry of External Affairs, announced several regulatory measures in response to the attack. Now, these measures included suspending the Indus Water Treaty, which governs the sharing of river waters between India and Pakistan, and closing trade routes at Wagah-Atari border. These actions were seen as direct retaliation and have significantly contributed to the volatile mode in the markets. The suspension of the Indus Water Treaty is particularly significant as it affects vital water resources that both combined nations rely on for agriculture and industry. The move has triggered fear of further deterioration in bilateral relations, with some analysis suggesting that this could escalate tensions in the region and destabilize already fragile economic conditions in Pakistan. The closure of Wagah-Atari border, a major trade route, has led to disruptions in cross-border commerce, further intensifying the economic strain on Pakistan, which is already dealing with an unstable trade deficit. These factors, combined with the ongoing geopolitical instability, have left investors in a state of uncertainty, with many pulling their funds out of the market to avoid further losses. The PSX website crash today served as a reflection of the impending crisis in Pakistan's stock market. This website's temporarily outage, coinciding with the sharp fall in market insights, only highlighted the scale of challenges facing the country's financial system. As tension between India and Pakistan continue to escalate, the outlook of the Pakistani stock exchange remains uncertain, with analysis predicting more vulnerability in the short to medium term. While the crash of the PSX website itself may have been a temporary technical issue, the underlying reasons for the market's sharp decline, geopolitical tensions, economic stability, and investor panic are much more profound. The situation underscores the vulnerability of emerging market economics, particularly those that are heavily reliant on foreign investment and prone to external shocks. Looking ahead, the future of Pakistan's stock market remains heavily tied on the resolution of its geopolitical tensions with India and the country's ability to stabilize its economy amidst ongoing political changes. The PSX, like many other markets in political volatile regions, faces a difficult road ahead as investors grapple with the uncertainty brought on to by domestic and international factors. The coming days and weeks will be crucial in determining whether the market can regain stability or further declines are in store. That's all for now on this update. Stay tuned to the Savera, download the app and follow us on Facebook, Instagram, Twitter and YouTube.